Hello, everyone, and welcome to the latest IBKR podcast episode. Today, we talk about Japan, and my guest today is Sho Shibamoto, who is a managing director of business development and Direxion. Sho is joining us today directly from Direxion Tokyo office. Hi, Sho.
Hi. Hi everyone, and thank you very much for having me today. My name is Sho Shibamoto, and I work at Direxion. As some of you might know, Direxion is a firm well known for leverage and inverse ETF in the United States. I'm a Japanese. I'm in Japan, and actually, I'm at Direxion's office in Shibuya.
That's-
So not too far from the Shibuya crossing, as you might
oh,
know.
yes, that's very famous spot. Thank you for joining
Yes.
us today. It's not our first episode on Japan. I know that you spent 18 years at one of Japan's largest asset managers and you were heavily involved in ETF business across Japan and United States. So we really would like to know your point of view on the market. So let's
Sure.
just start. Can you point out top three reasons to invest in Japan?
Sure. Maybe first, let me introduce myself again. So before joining Direction, as you mentioned, I spent about 18 years at one of the Japan's largest asset manager, Amova Asset Management. So throughout my career, I've been deeply involved in ETF across both Japan and the US. So Amova also has a strong footprint in Asia. So I work closely with the ETF market in Hong Kong and Singapore as well. So unfortunately, I won't be talking about US leverage and inverse ETF today, and I hope I can do that someday in the near future. But I'm very pleased to share my perspective on the Japanese ETF market and some of the trends we're seeing in Japan today. So, first of all, I've spent my entire career in Japan. And honestly, I think Japan is in a very different place today than it was even 5 or 10 years ago. So for many years, the investment case for Japan was mostly about valuation. So I used to promote Japan by saying that, hey, look, Japan equities are undervalued and that there might be potential upside from exports, growth, or economic stimulus. But today, I think the story is much more about structural change. So getting back to your question, so let me explain through three key reasons. So because I think three is a magical number that is always easier to remember.
Right.
So the three reasons are first, strong fundamentals. Second, corporate governance reform. And third, growing domestic retail participation. The first point, fundamentals. So Japanese companies are doing well, but the bigger story is that Japan is finally emerging from decade of deflation. That may not sound very exciting for foreign investors, but it's actually a huge change for Japanese people. Under deflation, people tend to delay spending because they think price will be lower tomorrow. Under inflation, the mindset changes. People become more willing to spend, invest, and make decisions today rather than wait. So due to inflation, companies are raising prices, wages are increasing, and businesses are investing for growth. So for Japanese, this feels very different from the environment we've been experienced over the last 30 years. Second is a corporate governance reform. So this is probably one of the most important developments in the Japanese equity market over the past decades. The Tokyo Stock Exchange has been actively encouraging companies to improve capital efficiency and enhance shareholder value. So as a result, we're seeing more share buybacks, higher dividend payouts, and the unwinding of cross shareholdings. So, in a simple terms, Japanese companies are becoming more shareholder friendly and paying greater attention to profitabilities, return on equities, and market valuation. So, I believe this is helping unlock value that has been sitting inside many Japanese companies for years. And getting to the third point is the growing domestic retail participation. So this is actually the trend that I am very excited about. Even today, more than half of Japanese household financial assets are still held in cash or bank deposit. So historically, Japanese individuals haven't been very active investors. However, that is beginning to change, largely because of the new NISA program, which is a tax exempt investment account. So normally, investment gain in Japan are subject to roughly 20% tax. Under NISA, those gains can be tax free, so making investment much more attractive for retail investors. So, not surprisingly, people started investing. Today, roughly one quarter of the population has a NISA account. But you look at it another way. That means three quarters of the population still don't.
Right.
So that opportunity is enormous. So even in the ETFs, there are only about 2 million retail investors in a country of more than 120 million people. So when you put all those things together, Japan has a very large pool of household saving that is gradually moving from cash into investment. And I believe that could become a powerful long term structural tailwind for the market. So when I think about Japan today, I don't see it as a simple short term trade. I see it as a market that is undergoing a structural transformation. And that's why I believe global investors are paying much more closer attention to Japan than they have in many years.
This great show. I can see that you're very passionate about this subject. So, and you mentioned there is an unlock value sitting in these Japanese companies, enormous opportunity there. So, let's say I got inspired, I want to participate. So, how easy it is to access Japan? Like, where do I start?
Yeah, great question. So, like the simplest and most efficient way to access the Japan market is through Japanese ETFs. The reason is pretty straightforward. ETF provides broad exposure to the market, so investors don't need to spend time selecting individual stocks. At the same time, they're very easy to trade. So, in fact, if you can trade Japanese equities, you can trade Japanese ETFs. So, for many investors, ETFs are one of the easiest and most convenient way to get started with Japan. So, I believe IBKR provides access to the Japanese market. So, if you're already using IBKR, you can trade Japanese ETFs through the same platform and gain exposure to a wide range of Japanese investment themes and indices.
Yeah, exactly. We do provide the access. And so I know, as you mentioned in the beginning, you spent almost a decade working with Japanese ETFs. So could you walk us through the ETF universe in Japan? What's so special about it?
Yeah, sure. Again, let me highlight three key features. I like number three. First is a market size. So, Japan is actually the largest ETF market in the Asia Pac region, with approximately 800 billion US dollar in asset as of May 2026. So for many years, the Japanese and Chinese ETF markets has been very close in size. However, Japan is currently slightly larger and significantly larger than other major markets in the region, such as Korea and Taiwan. Second is the number of ETFs. Today, there are more than 400 ETFs listed on the Tokyo Stock Exchange. But that said, the market is highly concentrated. So over 50% of assets tracks topics and about 30% tracks the Nikkei 225. So I'm not sure whether you're familiar with topics or Nikkei 225, but for those who may not be familiar with these benchmarks, TOPIX is a market cap weighted index that covers about 1,600 companies. And Nikkei 225 is a price weighted index consists of 225 leading Japanese stocks. And the third is the investor base. So one of the very unique characteristics of the Japanese ETF market is its institutional investor base. Approximately 94% of ETF assets are held by domestic institutional investors, including Bank of Japan, while retail investor and foreign investors each accounts for only about 3% of total assets. So this strong institutional presence contributes to efficient price discovery and helps support overall market liquidity. So to sum up, Japan is the largest ETF market in Asia, with assets heavily concentrated in domestic equity ETFs and supported by institutional investors. So in other words, foreign investors can access the Japan market in a similar way to Japanese financial institutions through ETFs. Again, foreign investors can access to Japanese ETFs through brokers like IBKR.
Thanks for mentioning that. All right. If we're talking about very specific traits of Japanese ETFs, what would that be?
So let me explain 3 ways to access Japanese ETFs. So first is the traditional on exchange trading. This is probably the method that most investors are familiar with. By the way, when you look at ETF liquidity, they often focus on trading volume. But in reality, liquidity is much more than just what you see on the screen. A key reason for that is the presence of market makers. So market makers provide liquidity based on the liquidity of the underlying securities. So in many cases, the actual liquidity available can be significantly greater than the ETF's display trading volume. And the Tokyo Stock Exchange has also been working hard to improve on-screen liquidity through its market making program. So today, 13 global market makers participate in the program, helping to maintain tight bid-ask spreads and efficient execution for investors. Another way to trade Japan ETF is OTC trading, or the over-the-counter trading. This is often used for larger transactions. So depending on the size of the order and market conditions, OTC trades can provide better execution. However, investors should keep in mind that OTC transactions involve counterparty risk because the trade is executed directly with the dealer. And the third way to trade Japanese ETFs is through RFQ platform called Connector. So Connector is an RFQ platform operated by the Tokyo Stock Exchange. And it is connected to systems such as Bloomberg, EMSX, and TradeWeb. So through this platform, investor can receive the best quote from multiple market makers. So what's interesting is that while the pricing comes from RFQ process, the trade itself is executed on the exchange and cleared through the clearinghouse. So in other words, investors can benefit from competitive RFQ pricing while avoiding the counterparty risk that comes with OTC trading. So getting back to your
Great.
question about what are the interesting themes in Japan. So I would say most assets are concentrated in broad indices, like namely TOPIX and Nikkei 225. There are several interesting segments. Let me give some examples. One is the active Japanese equity ETFs, which leverage on local managers' expertise. Another interesting topic might be JGB ETFs, which are becoming more relevant in a rising rate environment. And third, Japan REIT ETFs, So Japan has the second largest REIT market globally. So although REIT performance has been weak recently, but this is mainly due to the interest rate uncertainty rather than the property fundamentals. Maybe another interesting topic might be a category of JPY hedged ETFs. So what is it? So it's basically this invests in foreign assets such as US equities or treasuries, but hedge the currency exposure into Japanese yen. So in simple terms, this creates a long yen, short US dollar position. So these products have been especially popular among Korean investors and may be attractive for those who expect a stronger yen in a rising interest rate environment.
That's great. Thanks.
Sorry, I talked too
No, that's
much.
great because you really brought up a few things that we need to know if we're interested in Japan market. Actually, following up on that, I noticed there is some buzz on popular offshore ETFs, like those traded on US exchanges. So those that allow global investors to easily track Japanese stocks. So let's compare Japan listed ETFs versus those offshore ETFs. So, what investors should be aware of?
Sure. So I guess your question is why select Japan ETF over non-Japan ETF when investing into Japanese equities?
Right.
So let me explain the advantage of Japan listed Japan equity ETF. Again, I will raise 3 points. I like three. Again. So first is a management fee. So fees are very low due to a strong and tough competition in the Japanese ETF market. In fact, many topics ETFs have expense ratio of about 5 basis points, which is extremely cost competitive compared to global standards. Second is a bid-ask spread. So spreads are typically very tight because both the Japan listed ETF and its underlying Japanese equities are traded in the same time zone. So this makes it much easier for market makers to hedge their position in real time, which translate into better pricing and more efficient execution for investors. Third point is tax efficiency. So when investing into Japan equity through non-Japan listed ETFs, investors are generally subject to two layers of taxation on dividends. First layer occurs between the Japanese equities and the non-Japan listed ETF. And the second layer occurs between the non-Japan listed ETF and the investors. So in contrast, when Japan listed ETF, there is no taxation between the Japanese equities and the Japan listed ETF itself. So investors are taxed only between the Japan listed ETF and the investors. So over this time, this difference in tax treatment can have a meaningful impact on investment returns, especially for long-term investors.
Yeah, that's understandable. And
Yes.
it really looks like free is a magical number. So we really appreciate the insights you provided today. Traditionally, as I do, I would like to give you opportunity for a closure of this episode. So if you would like our listeners to leave with some takeaway, what would that be?
Sure. So again, I think as a conclusion, Japan is a market that is starting to move, and Japanese ETFs offer simple and efficient way to capture the shift. So as someone who was born and raised in Japan, it has been a pleasure sharing my thought with you today. And I hope to see more investment flow into Japan from overseas. Arigato and sayonara.
Thank you, Sho, for joining us today. It's been a pleasure. Thank you, everyone, for listening and subscribe to IBKR podcast. Thank you.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Any discussion or mention of an ETF is not to be construed as recommendation, promotion, or solicitation. All investors should review and consider associated investment risks, charges, and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Complex or leveraged exchange-traded products are complicated instruments that should only be used by sophisticated investors who fully understand the terms, investment strategy, and risks associated with the products. There is a substantial risk of loss in foreign exchange trading. The settlement date of foreign exchange trades can vary due to time zone differences and bank holidays. The interest rate on borrowed funds must be considered when computing the cost of trades across multiple markets. Interactive Brokers does not provide tax advice, does not make representations regarding the particular tax consequences of any investments, and cannot assist clients with tax filings. Investors should consult with their tax professional about the tax implications of any investment.